When you inherit a retirement account, what's your strategy for resheltering the money? Can you even do so? What does that mean? I'll share a real life planning scenario, that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. What's your tax shelter strategy? I honestly wish I came up with a better term for that, hopefully someday. But yeah, that's what it is. What's your tax shelter strategy? And that is, as you're saving up for the long term, how are you leveraging the different tax sheltered accounts available to you so that as you're trying to build wealth in a compound way, Uncle Sam's not reaching his hand in there and limiting the amount of compound growth that you can get. So this would be contributing to your 401k or workplace retirement, contributing to an IRA, Roth, maybe HSA, and whether you're investing that 529 plan. What's your tax shelter strategy for your specific financial situation and for your goals? One of the quintessential financial planning decisions within there is should your tax shelter strategy consist of pre-tax, Roth, or both, or maybe even more creativity in addition to that. You've got to look at all 6 areas of your financial life to know which one's best, and then that's not a one moment decision where once you make that decision, you're all set. It changes as your tax picture changes, your financial situation changes, your goals. You want to revisit that decision and looking at all 6 areas of your financial life. But in this context, dealing with a real life financial planning situation about resheltering assets. Now, what in the world does that mean? Here's the situation. Had an individual that recently was informed that he was the beneficiary of a family member's IRA. IRA was about 50 grand, and so wasn't aware of this, and so after grieving, of course, was saying, okay, well, what do I do with this money? Well, first know the rules, okay? So let's hit that. If the person that you're inheriting the money from is your spouse, you have the opportunity, you have the choice of saying, I actually just want to turn that tax sheltered account into my own. So in this instance, if it was his spouse that passed away with 50 grand in an IRA, then he could just move the money into his own IRA. It'd be his IRA and it would follow the rules as, you know, his IRA would. So that's if it's your spouse. You do have a choice as a spouse to say, you know what, I don't want to treat it like my own. I want to have it be an inherited account, and then it would follow these different rules. But if it's not your spouse that you inherit the dollars from, and that was the situation here, it was a different family member, was not his spouse, then the money needs to go into an inherited IRA or beneficial designated account, BDA, IRA. So basically it's still in that original owner's name, but with you being the beneficiary and now in control of the account. As such, you can withdraw all the money immediately if you want to, or you can withdraw a large chunk of it immediately. Again, this was an IRA, so when you do that, it's going to be taxable to you, but no penalty no matter what your age. If you don't want to draw it all out at once, now the new rule is you've got to withdraw the dollars within 10 years. The account needs to be emptied by the end of the 10th year after death. And if the person that you inherited the dollars from had already passed their required beginning date, meaning they were already forced to take required minimum distributions because they were 73 or older, then you've got to take those required minimum distributions as well based on your own life expectancy, as well as empty the account within 10 years. Taking just your RMD, just your required minimum distribution, won't empty the account out, so you'd need to take more than that. However, you don't need to take more than that every year. If you're thinking, well, I'm still working, I'm going to draw the dollars out later, maybe when I retire, if you're going to retire within that 10-year window, then you'll just want to take that required minimum distribution each year until that point. Well, in this instance, the individual that is inheriting the dollars is not working. So he's already in a low tax bracket, low tax situation. So we started talking about how to reshelter these dollars. Essentially, if they can't stay in the inherited account, the beneficial designated IRA forever. We know that. It's a 10-year rule, and we've got some flexibility and some choice in between then. But if the money isn't needed in the near term, and we know it can't stay in this tax shelter forever, the resheltering idea is how do you get the money out of that inherited account and into your own IRA? Can you just transfer it directly or roll it into your own IRA? You cannot. However, we devised a multi-year strategy where from this, we're going to be looking at how can this individual take these dollars, these inherited dollars, and reshelter them into his own IRA or even Roth IRA. Couple points to mention. Currently, he's not working, but that's not the long-term plan. He's expecting to go back to work later this year, and certainly by the beginning of next year, back into the workforce. So the thought is, right now, and because it's at the beginning of the year, we're not putting anything in motion just yet, but here's the plan that we laid out, that because he'll be back to work and have some earned income later this year, withdrawing the dollars, or at least a chunk of the dollars this year, is going to make sense because with just a partial year of work, he'll be in a lower tax bracket. But because he'll then have earned income, that would then allow him to contribute to an IRA or to a Roth IRA. How we have it sketched out, and we'll see exactly what the plan is, he would be able to, we would recommend contributing to a Roth IRA because, again, expected to be in a lower tax bracket this year with just a partial year of income. Therefore, even though the required distribution on this $50,000, barely anything, $1,000, maybe $2,000, the plan is that we're going to withdraw $8,000 this year, later this year, once we confirm he's back to work and all that sort of stuff, and we plan out the income and his tax projection once he's back in the workforce based on how much he's earning. The plan is to draw $8,000 out of the inherited IRA, pay the taxes, whatever, but then contribute $8,000 into his Roth IRA. That's resheltering, essentially resheltering. Checking the box for withdrawing the required amount, but we are taking quite a bit more than that so we can max fund his Roth IRA for 2025. The plan is then to do that again in 2026, again in 2027. Just depends on how much his earned income is. But the thought is, well, this year he'll probably stay in the 12% tax bracket. Next year and beyond, when he's working full time, probably staying in the 22% tax bracket. And for us, we'll of course decide, well, as you withdraw dollars, should you contribute pre-tax or Roth, but there will be an aggressive plan to withdraw about $8,000. That's the maximum that he can contribute to an IRA or traditional IRA or Roth because he's over age 50. The plan is to withdraw $8,000 from the inherited account and shelter it, contribute it into his own IRA each year. That way, it's going to take a couple years, but it's a way of playing the shell game and having these dollars come out of this temporary account, temporary tax shelter, and into his own tax shelter that can be sheltered for decades and decades to come, even to pass along to his heirs as well. So, what's your tax shelter strategy? When's the last time you worked with your CFP on it to make sure that it's the appropriate one? And then, should you have excess dollars, either from extra income and inheritance, something like that, what's the resheltering strategy that works best for your situation? Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go on and take your next wise step in your financial life.